You're watching BloombergQuint. The Reserve Bank of India's Governor Shaktikanta Das had an emergency address this morning in light of the second wave of COVID cases, which is bound to impact the economy sooner or later. We'll run you through some of the key announcements in a brief few minutes and give you a little bit of perspective on them. One important announcement is the RBI prompting banks to sort of create a COVID loan book. What does that mean? Well, they've opened a special liquidity facility of up to 50,000 crore. Banks can avail this liquidity for on lending to anybody in the healthcare sector. So you're talking about hospitals, vaccine manufacturers, vaccine importers, pharmacies, perhaps testing agencies, and even patients who need emergency funding at a time like this. Now, it's all easy for the RBI to say that this liquidity is available. Eventually, banks have to be willing to lend. So the RBI is trying to create a few incentives for banks to lend. One of them is that all of this lending will be classified as priority sector lending. That always creates an incentive for banks. And the second, more sort of unique incentive created is that liquidity, which is equal to the size of this COVID loan book, can be parked at the RBI at a rate which is 40 basis points above the reverse repo rate. So basically, they can earn a little bit more on this money. And given that banks have surplus liquidity, this seems like an additional incentive that the RBI is providing to them to go ahead and lend to businesses and people who are in need. Well-meaning measure. The implementation of this, we'll see how many banks take it up. Perhaps it will be the PSU banks who would be a little bit front in line to do this. Private banks may be a little bit more reluctant. The other big announcement, and this one was more expected, the one-time restructuring window, which had been first provided last year, has been reopened, but it's been reopened for individuals and MSMEs. The RBI has said that you can one-time restructure these loans all the way up till 30th of September 2021. The implementation, another 90 days has been given for that. The conditions imposed here are that you should have been standard as of 31st March 2021. That means you should not have been in default. And also you shouldn't have already restructured your loans under the first facility that was given last year. In addition, the RBI has said that within this facility, which allows a bank to extend the tenor of loans up to 2 years, you can also provide a moratorium of up to 2 years. This was permitted even last time, but the RBI has said that, for instance, in the last round, if you had not given a 2-year moratorium and you want to now give a 2-year moratorium to borrowers who had availed of that facility, you can do so. Now, look, we recognize the need for one-time restructuring without a downgrade to asset to non-performing category. But we also know that this is a slippery slope. It does push pain, down the road. And the other problem is that once restructuring and one-time restructuring schemes come on the table, you seem to see them with, a fair amount of frequency, which is not good for the banking system. But we recognize that this is something that may have been required at this point in time. There are measures announced for small finance banks. Firstly, they lend to the vulnerable. Secondly, they have seen some stress of their own. So there is a 10,000 crore liquidity facility, TLTRO, targeted long-term repo operation, is being provided for small finance banks. Small finance banks can on-lend to MFIs and even lending to MFIs of asset size of 500 crore will be classified under priority sector lending. So again, this is a measure to ensure that money flows to small finance banks. They don't have a liquidity crunch, and then they can on-lend to smaller MFIs who are sort of the last line of defense for small borrowers, particularly in rural areas. So that's a useful facility again. What other measures have been announced? Well, there's something for the bond markets, although just marginal. Remember that the RBI had announced a GSAP program under which it was buying 1 lakh crore in government securities. Well, what they've done is they've said that the next round will be held on the 20th of March, and that will be a 35,000 crore round. The last round was 25,000 crore. So, just giving some visibility, but it doesn't change the needle in terms of the actual support to the bond markets that perhaps as of now remains at only 1 lakh crore for the current quarter, that is. There is some relief for states that has been announced as well, and this is again marginal relief. The RBI said that states who borrow under the Ways and Means Advances facility can stay in overdraft for a longer period. 50 days is the maximum overdraft permitted compared to 36 days earlier. And at a stretch, you can be in overdraft now for 21 days. This is not a very widely used facility. Even at the peak of the crisis last year, states were very choosy in going to the WMA facility. So it has some sort of salutary impact, but not a material impact. But the broader message from the RBI is important as well. The RBI governor said that things have changed dramatically since the last time the MPC met. Now, nothing has changed in terms of rates or the MPC's outlook right now because the MPC hasn't met. But the governor certainly suggested that things will change quite dramatically because of what we are seeing in the second wave. He did not suggest that there would be a material change in their inflation projections because he said that we don't expect broad deviations, but he did say that the COVID trajectory would guide and shape the inflation trajectory. It would also dent aggregate demand, he said, likely to be focused on the contact intensive sectors. And finally, his message was interesting that the RBI is committed to staying unconventional and will continue to take small and big steps through the year. So the RBI first off in trying to support the economy as the second wave hits.